I've got some pressing XRP updates I think you really need to hear today. So here's the deal, there's something super important that often gets overlooked. The current surge in Bitcoin and XRP, it's not going to last forever. Now before you jump into the comments saying, but wait Levi, you're always so optimistic about XRP, weren't you saying it's headed to $20? Yes, I still believe that long term, but that doesn't mean the path there is going to be smooth. Crypto doesn't move in a perfect upward line. It's more like a roller coaster, climbs, dips, and then more climbs and more dips. That's just how this space works. Every time it seems like Bitcoin is destined to reach $110,000, the market throws in a correction. It's happened many times before, and based on what I'm seeing, I believe we're about to experience something similar again. This is all short-term analysis, just my personal view, not financial advice, so please do your own research and check the disclaimers. Now let's dive into what's going on. To start off, I want to zero in on market sentiment, which I think is one of the most telling indicators out there. Right now, people are riding high on confidence because their portfolios are looking great thanks to recent market surges. But here's the catch, when people start feeling invincible, they tend to act out of greed rather than logic. The same applies when fear grips the market, decisions get clouded. That's why I stick to a personal rule of thumb: when the crowd is overly greedy, it's usually a good time to sell. When the crowd is panicked and fearful, that's typically when I'm looking to buy. I'll explain the logic behind this more in a bit, but the key takeaway is this: right now, greed is dominating the market. One of the reasons for this current wave of bullish energy is former President Trump's recent string of positive crypto-related statements. These have triggered a buying spree, not because of real technological adoption or fundamental changes, but largely due to hype. So what we're seeing is a bit of artificial inflation in asset prices, and that extends beyond crypto into the stock market as well. Some might argue we've established a new baseline because of global trade deals, and I do think there's merit in that viewpoint. But to get a clearer picture, you've got to consider sentiment indexes, tools like the Bitcoin and stock market fear and greed indicators. Both of them are flashing greed right now, and that should make any smart investor pause and reassess the short-term outlook. Right now, it's pretty clear that emotions are running high and logic is taking a back seat for a lot of investors. Because of that, it wouldn't take much, just a modest push from a few big players with deep pockets to send prices tumbling instead of pushing them higher. The way things stand, with the current balance of open positions and the tug-of-war between longs and shorts, the market is in a vulnerable spot. If a bunch of short positions get wiped out, it could cause a sharp dip across various assets, whether that's in stocks or crypto. All it really takes is one major institution stepping in and saying, that's it, time to short the market, throwing in billions, and suddenly a ton of long positions get crushed. That's the kind of domino effect we've seen before. I remember watching XRP crash more than 30% in just one day. Now, I'm not saying that's going to happen again tomorrow, but with the way things are shaping up, it's a scenario we need to stay ready for just in case. On another note, Trump has recently been putting a spotlight on cryptocurrency, and every time he does that, it tends to inject new energy and money into the space, which on the surface is great. But right after that initial excitement, what usually follows is a wave of opportunists stepping in. I'm not calling them villains, just people looking to make a profit. And when those folks show up, it's often retail investors, everyday traders, who end up taking the hit because they're not aware of how easily markets can be swayed. Lately, Trump's even been talking about how the US is outpacing China in the crypto race. That's not just about pride, it's a strategy to stir things up and get Chinese markets to respond, likely pulling them into the mix even more. And to be honest, I think it's a pretty clever play. It creates a global buzz which opens the door for some of the ultra-wealthy who prefer to stay anonymous to jump in, stir the pot, and maybe cash out big while others get wiped out. That's just my theory, of course. I don't have a seat in those high-level strategy meetings, but based on how this has played out before, it feels very plausible to me. And there's more. Trump is expected to reveal a new trade agreement once he wraps up his trip to the Middle East and returns to the White House. From what I've gathered, we could be hearing some major updates within the next few days, possibly even something involving Canada. These trade deals can have ripple effects across global markets, including crypto. It's a lot to take in, and honestly this week could bring some major shifts. Now, while I am cautious about a correction, I'm not ruling out the chance that Bitcoin could surge to a new high, maybe even break $110,000, especially if it can stay solidly above $105,000 for a bit. That's definitely within the realm of possibility. The bottom line is, I just want everyone to stay sharp. There's good news out there and some warning signs too. I'll be breaking down both sides because you deserve the full picture so you can form your own view about where things might be headed next. Alright, take a moment to really think through the details I'm about to lay out, and from there form your own perspective. In April, the US Treasury posted a budget surplus of $258 billion, the largest we've seen since 2021. Total income to the government came in at $850 billion, while it spent around $592 billion. One of the biggest contributors to that surge in revenue was a 16% jump in individual tax payments totaling $460 billion. On top of that, customs duties climbed by $9 billion compared to last year, hitting a new record of $16 billion. But despite the surplus, the bigger picture shows the US is still deep in the red. Over the first 7 months of the 2025 fiscal year, the national deficit increased by $194 billion year over year, now totaling $1.05 trillion, making it the third largest ever recorded. So yes, we're seeing some solid revenue numbers, but the overall debt and deficit problems haven't gone away. They're still looming large, and that's not the only area showing stress. US banks have started to clamp down on lending. In the first quarter, about 19% of banks reported tighter lending conditions for medium and large-sized companies, the highest level since the third quarter of 2023, back during a bearish stretch. Meanwhile, 16% of banks also made it tougher for small businesses to get loans, which is the highest tightening since early 2024, ironically right around when this bull market began. What's more concerning is that banks are seeing far less demand for credit. For big firms, the drop in loan demand is the widest we've seen since Q3 of 2024, and small businesses, they're not far behind. This drop in borrowing means less investment and slower expansion, which could seriously drag down economic momentum in the months ahead. Now here's where it gets even more serious. The US government as it stands can't really afford a recession. If we look back at previous downturns, the federal deficit typically expands by about 4% of GDP. If that happens in 2025, we're talking about another $1.3 trillion hole in the budget. Sure, if a recession hits, interest rates might drop, say, by 2 percentage points, which could save around $56 billion a year in debt interest. But that savings is dwarfed by the much larger financial hit the government would take overall. Simply put, a recession would be a massive burden on an already stretched federal budget, and that's why the stakes are so high. If you look at the broader picture, it's clear why Trump is pushing hard to boost revenue streams, something he's had some success with through increased tariffs and stronger tax collections. Still,